Sam here, and I'll be doing the premium video for Friday, July 11th, 2025. So, yet another week is in the books. Very exciting week here with this very impressive doji candle. So, let's dive in. The markets are certainly. I don't think I've done a video with you guys in about 2 weeks, so we do have a new all-time high in place. And this will give us a chance to catch up and see everything that's moved over the last couple of weeks. So let's dive in. Here on SPY, there's really no signal changes. I'm not loving this candle here at the all-time high. I don't love the tight consolidations up here. This could be a flag. It could be a bull flag, I suppose. I don't have a reason necessarily on a daily chart to doubt this. You see here that it's 100%, so that's as good as it gets. You are extreme here, and this is a little bit of a warning sign. That is not a super common thing that happens, and you can see here what it took to get that signal. The real issue that I'm seeing is that from the inside out, like the hourly time frame has gone completely neutral, and this is the first time that it's been neutral in weeks. So there's a little bit of an issue there. And then on the 30-minute, it's slightly negatively neutral. So this isn't something you can see on the screen currently because we're looking at the weekly and the daily. But if you ever want to get a closer look at something, you can always look at a smaller time frame. And here on SPY, it looks a little bit murky, to say the least. So could this be a flag? It could. It also could be kind of a distribution zone before you actually get a pullback back to the daily 21. So I don't actually have a clean read on that at the moment. Let's continue forward and let's see if things start to make a little bit more sense as we look at more things. So very similar action here on the Qs. Overall stronger. And they do have a high compression hourly squeeze. I can see this on another monitor. The high compression squeezes are my least favorite type because they are the most likely to break counter trend. So this one would be more likely to break short. Of course, it is still a very bullish chart, but it's basically the exact same story as SPY, where if we look at the weekly chart and the daily chart, there really is no signal change to speak of. But if you look at it from the inside out, you're starting to lose momentum, trading sideways, and there's probably a lot of stops below 550 on the Qs. So it's a tough read to bring you here, at least so far, 2 charts in, because the daily chart and the weekly chart is very bullish, but from the inside out, the hourly chart has gone completely neutral, and it has a high compression squeeze, which is also the most likely to break short. So if the hourly chart was more bullish, then I would say everything is aligned. But as we go into the weekend here, I actually don't see that level of alignment. And when I have a market that looks like this, I think it's usually over a long sample size. I think it is usually better to day trade it because we're pretty extended. The internal components of the market on the hourly and lower have all gone neutral. And at least for me, I would want to be ready for anything when that happens. Let's look at the IWM. So the IWM here with an inside week. A little bit of a false breakout here in IWM as well. So not a huge fan of that. You have the little bit of a swing high here. You trade it above it, gap it down, close it near the lows. Not great. Not a great candle here as well. It is basically just a doji candle, but if we just focus on the price action here, this is actually one of the more dangerous patterns when you have a flat top. You trade above it and then you trade back below it. The reason being is because it traps everyone who bought yesterday, and typically what will happen is you'll have to come back down to the bottom part of the range. So that would be right around 219 on the IWM. Same story here on the IWM. On the hourly, it actually has some minor sell signals, but from the inside out, it still looks fine. So this is one of those classic spots where if we're just looking at the weekly and the daily, which we have so far in these three charts, you don't see weakness. You'd have to kind of dissect it and say, okay, well, this is not a sign of strength here, what we just covered. But if you look at it from the inside out, it starts to look a little bit more suspect. So I'm not seeing anything here that would change my mind in terms of preferring to day trade going into next week. Let's go over here to the Dow. The Dow actually is in even worse shape than the IWM from the inside out. And below 442, I would imagine there's quite a little bit of a drop there. So this one actually put in a lower close, unlike the others, which have a doji. This one has more of an inside candle. But again, let's not keep looking at neutral things and trying to expect them to change. When it's neutral, it tells me to shorten my time frame, because neutral charts can go in either direction. And if I'm looking at neutral charts, I typically want to drill down to like an hourly or a 15-minute and trade from there. So I'm still not seeing anything that would change my mind in terms of day trading. Let's go to HYG here. We look at HYG, for those of you that are unfamiliar, we look at HYG as a proxy for risk taking. And actually, now that I look at it, HYG gave us a signal pretty much on the first of the month that things were a little bit suspect. So this is the pattern that I showed you on IWM, where you have the false breakout. So you have a previous resistance zone there. You trade above it, gap below, and you see how it's kind of stuck here. So this is still above 80, so this is still fine. The overall structure is still fine. No major issues to speak of here, but I don't like to see this high zone trade above and then back below. So yet again, another warning sign of, and I don't even want to use the word warning sign necessarily, because that implies that it's a short, when in reality I think it's just bring your risk in, tighten up your stops, shorten your time frame, and look to day trade it. Let's take a look at the dollar. I'm not entirely sure what we'll gain from looking at the dollar. It hasn't exactly been overly useful for trading equities, but let's take a look. So the dollar here is starting to catch a little bit of a bid. It does have a very large positive divergence underneath it, and I don't think this is a good thing. Now, of course, this has the same problem but opposite of the indexes. If here you can see that the dollar is actually strong bear on both time frames, but from the inside out it actually has some positive divergences. So normally the rule of thumb is weaker dollar, stronger equities. Don't get married to that idea, just understand that's how the relationship typically works, is dollar down, equities up. Now I do want to stress that's not like an overly strong correlation, but in general. So if that's true, then the opposite is true, and that is if the dollar starts to catch a bid here, maybe that adds a little bit of pressure to equities. So we've looked at a handful of charts so far, and at least with SPY, it immediately caught my attention from the inside out. The hourly chart starting to lose momentum, pretty extended, weekly doji. One thing that I haven't mentioned is the momentum stocks all got hit starting yesterday. So you're seeing the big pullbacks in all of the, the hyper stocks, and that usually can preclude a little bit of a signal change, because if they start to rotate out of momentum tech, you can't hold up the market by going into Procter and Gamble or Johnson and Johnson or something like that. So not the greatest setups here. We've seen better. The VIX here, trading very subdued, but one warning sign that I see here is that it's gotten to an extreme oversold level, and the VIX very often, when it trades in a very tight box like this, that can be a precursor to moving higher. I don't think this is necessarily a signal worth discussing yet, but not a signal I like to see if you're bullish. And then of course we can look at VVIX, and VVIX as of right now hasn't actually done anything, so this isn't all that important either. Alright, so very exciting video where we're trying to piece together things that don't necessarily, two puzzle pieces that don't necessarily fit together. We have a very strong weekly chart, very strong daily chart, so the big picture is very much intact, very strong, but from the inside out everything has lost momentum at new highs. The momentum stocks, which are very important for keeping that momentum, started getting hit yesterday and continued to get hit today. We are seeing some rotation to parts of the market that have been a laggard, but those parts of the market don't necessarily matter as much, right? Like if momentum tech drops, they're going to have to buy a whole lot of staples or something to buoy everything. So putting all the pieces together, the best thing I can tell you, and the advice I would give myself, and the advice I will give myself going into next week, is tighten your risk. Like I had 2 trades in the room that I thought looked pretty good, and I had to take them off for break even. So we didn't lose anything, we didn't make anything, but they were short dated, they expired next week, and I just wasn't overly confident about the market. And this was in the middle of the day. And now that I've done this review with you guys, I can see the reasons why. So that would be my best take on it right now, would be to manage your risk, number one, go into next week with a hyper focus on risk, number one, which should always be your focus, but let's make it a hyper focus next week. And then for myself, at least, when I have bullish charts that are neutral from the inside out, which can allow, a neutral chart can go either way, and if the neutral hourly turns into a bearish hourly, then that'll start to break down the daily chart. So when that's the case, which is the case right now on everything that we're looking at, then for me, the best course of action is usually to shrink my time frame and day trade it. So I'll go ahead and wrap the video there. Was hoping to see maybe we could get a little bit more synergy, alignment between all the markets, but I think they actually in some funky way are giving, at least me, they're giving me some level of alignment. And the level of alignment is, this is a little bit of a dangerous spot. I'm seeing a lot of warning signs. When I see warning signs, you bring in your risk, you shorten your duration, you shorten your time frame, and you look to day trade it, and then you just wait for things to align again and go back to status quo. Alright guys, that's my time. If you're watching this video on the YouTube, drop us a like before you go somewhere else. And for those of you in the room, I hope you have a good weekend, and I'll catch you guys back in the room on Monday. Cheers.